I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is October 19th.
And this is your interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like.
And remember, folks, this is for informational purposes only. We are not financial advisors.
All right, getting right into interest rates, where they're at today, we see the 30-year fix at 6.75%. Our last update was 6.375. The 15-year fix, 6.125.
Yep, and the 30-year FHA, 6.375, and the 30-year VA, 6.375.
Remember, these quotes that we're showing you are based off of these loan assumptions for conventional loans, FHA, and VA. Right here, there's no extra points, no buy down costs, no extra points.
Yeah, and these aren't super rare hypothetical scenarios. So there's a really, really good chance that you're going to fall into one of these buckets. When you say, who has 25% down? People selling their homes would have 25% down. And we have people upgrading, downgrading, those things. So very likely scenarios.
All right, and we want to show you a high level where interest rates have been since 1971, the 30-year fix. And if we just look at this perspective, you can see where on the very far right, that steep cliff there, this is about March, where March just came, well, yeah, it actually was about February to March, and we just saw these rates just go up from that high twos, and now we're 6.75%, and basically we're right where we were about 20 years ago on this chart.
Incredible. Yeah, we called this the interest rate slide. It slid for so long, and then look, it took a pause about 6 months ago and started moving up.
Yeah, we see that the interest rates hit that high in 1981, 18.3%. Again, for 36 years, the market's been going down in these rates. We do not think that this is going to be sustained long term. This is eventually, the Fed is trying to stop inflation, put inflation back down into normal levels, that 3 to 2%. And right now, the interest rates are on the rise to combat the inflation. That's the number one. Once we see inflation coming back down, we should see these rates come back down as well. When that will happen, Tom and I, we really believe in could be 24 months.
Yeah, hoping for shorter. If someone were to ask me, what would you totally bet on right now? I do think things happen much different than you always think. So if you want to try and guess something, it's probably going to be wrong. So hopefully it's sooner than that. But that's a possibility. That it does take 24 months. I personally think that's a really long time. Yeah,
I'm really committed to the idea that rates will be back into the 4s and 3s and even 2s again, and it won't be that long. I mean, a couple years we'll be back into low rates. So the rates that we see today, remember, if you're purchasing a house, you can always refinance into these lower rates, if rates do actually come back down.
Yeah, and we really,
which we do believe.
And we really do believe that. And it may sound self-serving, but the reality is, look how long we have had those low interest rates. We will go back down because we're resolving a one-time issue, which was that pandemic that we fell into a couple years ago. Once that gets back under control, I think we should go right back to where we were.
Hey, check out this awesome calculator that we created for you to use. If you look in the description of this video, you're going to see a Google Sheet link. You can click on that link, then go to File, make a copy, and
then it's yours to keep.
It's yours.
So you're out there, you're looking for homes. You may have seen calculators, but this is the calculator of all calculators. It just has a little extra oomph. It's got it all in there. It talks about payments and funds to close and income to qualify. Anything in yellow, you can adjust. So let's go over a couple of those things.
Estimate the interest rate. It doesn't have to be perfect. If you don't know it, you can just estimate your credit score, put that in there, the non-mortgage debt, your monthly non-mortgage debt, car payments, student loans, etc.
Anything that you think would show up on your credit report.
Because this calculator can calculate not only your payments and how much the funds to close, but it'll also estimate what your income will need to be to qualify.
Right.
And this is a fantastic, very thorough calculator. So go through the sales price, put in what you estimate your sales price, the term of the loan, taxes, homeowners insurance, HOA.
And I will jump in. The closing costs and prepaids are really hard to figure out. So either use whatever number we have in here or just call us and we can give you a good number. You can find out everything else. It's just those numbers are going to be hard.
Put in the down payment options you want to look at. Then you'll see this sheet. It'll give you the breakdown of everything from their payments, the income needed to qualify, cash to close. And this is a grid format, but you can also scroll down here and see these nice bar charts breaking down those payments.
Yep. And this payment is so good. It actually has the HOA payment in there, but the reality is the HOA payment will not be part of your mortgage. So just know that we are including it in here so you can see your total budget, but it would not be a part of your mortgage payment every month.
And then you can see your down payment options and how those income requirements look on this bar chart.
That's right. And if you don't make this, go to your employer and get a raise.
Oh, yes. So be sure to take a look at that link. Make sure to make a copy for yourself and ask us if we can help you in any way.
All right. Thank you, folks.
Thanks for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.